Check, please.
Hey, welcome back to Everything Money. In this video, we're going to take a look at 3 companies that have very low multiples. This is Big Lots, Moderna, and Olympic Steel. We'll show you the financials behind this company and see why people in our community are very interested in them. We'll go through them using our software and look at the stock analyzer tool. You will hear Paul's thoughts, a guy that owns over $100 million in assets from real estate, multiple businesses, and stocks, and he will guide you and I on where we're going with these 3 companies, why the stock price is up or down, and where we can go with them. Paul, give me your take on these 3.
Thanks, Seth. So guys, 3 things I want you to do before we go. It takes 2 seconds. If you like this video, whether now or later, like it, subscribe to our channel, and make sure you click the notification bell. That way you find out when we release new videos.
That'd be helpful.
Very helpful. So guys, 3 stocks we're going to look at here. Big Lots, Moderna,
Olympic Steel.
and Olympic Steel. Olympic Steel is a Cleveland company.
Yes.
Go Steel. Now remember, with
that.
Steel, here are my comments on Big Lots, Moderna, and Steel individually before we go further. I wanted to buy Big Lots a long time ago. I was convinced not to by the person I think is the best investor ever. And now I want to murder him because it was at $11 when I wanted to buy it. It was literally like at the bottom. Moderna, a lot of hype around COVID. Is that sustainable? I don't know. So don't get confused. I think we'll see a low multiple of earnings and free cash flow. So that means if the company makes $1 billion in free cash flow, this company is selling for like $9 or $10. Okay. Be very careful about companies that are only have basically one product that made them a lot of their money. If that goes away, and my question is, where do you think COVID is going? I think it's going away this year. Is it going away completely? No, but I think we're going to be past the whole fear tactics that Seth and his buddies all do.
Yeah.
To influence us and make us feel like we're less people because we want to be forced to. Anyhow, and then finally, why do I keep forgetting the last one?
You know, I know where you're going with this. You had a company in 2018 where you sold molded versions of your own junk, and it
flopped. Completely flopped.
No pun intended.
No pun intended. Wait, what was the third company?
Olympic Steel.
Olympic Steel. Thank you. Cleveland. Thank you. So guys, the thing about Olympic Steel is, it's a dick move when the guy, it's really stupid of me when the guy behind the camera is sitting there going like, it's Olympic Steel. Whenever you're looking at a commodities-based business,
yes,
you have to look at the commodities' underlying prices. That will drive revenue and profit. Do not look at it on a one-year basis. So my guess is the multiple are low because steel prices are high because building and construction is booming.
Now, what multiples are we talking about with these 3
Well,
bangers?
let's look it up. This is our Everything Money software. More on that later, how you can get it for under a cup of coffee a day. So let's start with Big Lots. Ticker symbol BIG. Oh, man, this is down a lot. Man, oh, man. So last year's PE, 5.2, 5-year PE, 4. Let's go to the 8 pillars tab. 5-year free cash flow, 11.96. So the free cash flow might have suffered a little bit lately, but the PE is pretty high, pretty low, I mean. That's a low multiple. Next thing, Moderna. Probably not even enough information here. 8 pillars, not enough data. But let's look at it this way. Moderna is selling for 9.2 times PE. And their free cash flow was $11.4 billion last year, and their market cap is 65. So it's roughly 5.7 times free cash flow. That's a low multiple. Okay? And then finally, Olympic Steel. It's ZEUS is a ticker symbol. Let's go to the 8 pillars. 5-year PE of 9. No price of free cash flow in the last 5 years. Why? They're probably negative for the last 5 years. Let's look at their cash flow statement. So their cash flow statement shows negative 100, 48, 99, negative 60, negative 50. So they just haven't had any free cash flow in the last 5 years. I avoid companies like that.
Right off the rip, they need cash flow.
I'm looking going like, listen, so steel prices. Did I spell steel right? Let's look at all years of steel going back to 2009. This is steel prices. And I bet you if you go look at Olympic Steel's revenue and profit, it goes like this over that time period.
Mm-hmm.
All right. Now, this is where it stands right now. Okay. It's on the high end of the last whatever years. The very high end. It's currently at $4,800. It got as low as, what is that price? $2,400. So half the price. No, less than that. Sorry.
So with these steel and iron ore companies, Paul, is this a thing where you want
$1,700.
You want to kind of find a company that's operating quite well and then wait for the steel industry to maybe, or am I just crazy trying to time this thing? I mean,
you never try to time anything. What I would do is if all of a sudden steel collapsed to, I like this in Richer, Wiser, Happier, the book we did. We have a book club as part of our software. So people come in, we read this book. We're reading Richer, Wiser, Happier right now. Okay.
Yeah.
Chapter 2 is on Sir John Templeton. One of the things I like that he said is you'll probably do pretty well investing if you go look at the last 3 or 5 years and find the sectors or industries that have done very, very poorly. So when steel is like, you don't touch steel, it's terrible, it's awful, it just keeps going down. That's when you start looking at steel providers. I bought GDX and GDXJ on gold miners because I thought that everybody's ignoring gold. And now if inflation starts to rear its ugly head, I think gold will go up. More on that later. But when it comes to commodities, look at secular downtrends. Look at when they're down a lot for historical reasons. All of a sudden, hypothetically, 08 happens again and nobody wants to build anything anymore. Building drops by 80%. That's when you want to look at steel. When everything is just collapsed, go look at long-term trends. And even then, go look at long-term earnings and free cash flow. The thing that concerns me is Olympic Steel. I mean, the last 5 years have been pretty good for steel prices and they have no free cash flow in the last 5 years. Big Lots. What are they doing for me on Big Lots? What are they doing to really own the online area? Because even though their average user is probably lower income, everybody uses the internet and it'll just keep growing and growing and growing for those people, right? And Moderna, what else they got in the pipeline? I just don't like I'm probably wrong on what percentage of their revenue is driven by COVID. Let's go back to Moderna. That's one thing I want to look at is MDRNA. Nope, mRNA. Income statement. I mean, Jesus Christ, look at this. 191 million 2018, 81 million 2019, 246, $11.8 billion in revenue last year versus 246 million the year before that. If you think this is sustainable, more power to you. I just don't think it is. And I didn't want to make a bet on that. It's just too much growth too fast. I don't like it. And look at how they fell in half here. Revenue, less than half. So with companies that are selling for low multiples, most times, 8 out of 10 times, they're selling for low multiples for a reason. So be cautious. Don't fall into a value trap. This would be a value trap. Like, oh, the multiples are low. No. Go look at the company, see the future. The future and the revenue growth potential is what's going to drive the value in the future. Revenue growth, profit growth. That will drive value long run. As long as you pay a reasonable price for that today, you will do very well. Okay, so that's it. This is the way I look at these 3 companies. I'm actually avoiding all 3 of them. Big Lots, I'm not avoiding. The one I'm most interested in is Big Lots. I was a fan of Big Lots at 11, and I thought it was worth 40 to 50. There's not enough juice. The juice isn't worth the squeeze right now at what's it called? Because I think their revenue in the last year has skyrocketed because people get back to the stores, blah, 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 blah. Got to look at a long-term trend when there's those outlying situations that have happened. All right, so I said I like Big Lots the most. So let's actually use Stock Analyzer tool to see what Big Lots could be worth in the future.
Before we get to that, if you're interested in the software, if you want this in the palm of your hand on your phone, you can have it. Paul, show them how they can become a part of our community and get this right now.
So guys, we created the software because our users wanted to be able to analyze their own stocks without having to wait for us. So we put hundreds of thousands of dollars, made the software. You get 30 years of financial data. You get access to Seth Mo and I, 8-pillar analysis, the stock analyzer tool, the retirement calculator, and you get everything on this main page that is coming soon. This is all included. And if you look right here, these are all the things you get. You get everything on a mobile phone. Everything we're talking about here is ready, available on your mobile app. One app for everything. But most importantly, guys, you get our Discord, our community of, now it's off of Discord. It's right in our app. You get a community of over 6,000 people you can talk to every single day about your investment ideas. If you're like them, you felt alone having these ideas about investing that weren't reciprocated by others, but now you found the community here. And this is all available for only $1 per day. Less than a cup of coffee. If this can make you 1 or 2% or save you 1 or 2% of losses every year, it will lead to hundreds of thousands, if not millions. $1 per day, 2 ways to sign up. Everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge sales tax, so you won't be charged sales tax quite yet. And look at this, guys. You get all of this. Our competitors are a lot more money and don't provide as much. $1 per day. Go sign up now. All right, so Big Lots. Type in Big Lots. We go to the Stock Analyzer tool. Now, guys, first thing I do here is I enter the number of years of analysis. Do I think Big Lots will be around for 10 years? I actually do, because I think they provide a good service, and they're not like Walmart trying to be 30,000 stores. I do think they fit a good market, good service, and they have great margins. Okay, I think their margin's like 40%. Walmart's only 25%. I think their gross margin is really healthy. So, revenue growth. Now, here's where I'm going to be conservative.
You're right on 39.5. Boy,
is it 39.5?
You know your numbers.
Yeah, I remember it from before. So, I'm going to be conservative here, guys. I'm actually going to go with negative growth on the low growth level. I'm going to go -3, 0, and 3% revenue growth. For margin, wow, actually surprised. Their margin last year was actually lower than their historical. Interesting. So I'm going to go 3.5, 4.25, and 5%. Free cash flow margin, I'm going to go 2.75, 3.25, 3.75. PE, 8, 10, 12. Free cash flow, 8, 10, 12. 12.5% return on my money. Because guys, remember, you can invest in an ETF and get 9 or 10%. So for doing this work and having proper margin of safety, you need a higher return, which means paying a lower price. Analyze. Man, Sethi.
Current price is $37.
I mean, look at this. $37. It's still in the low end of the range. Even if you get negative 3% revenue growth a year.
Wait a minute. You're saying if this company starts dying off, I'm still doing great on
yes,
this return?
You're still going to be able to do great. Even selling at 8 times profit in 10 years. This is what I'm saying. Like, this is where I go,
Me too. Is there something holding you back with the brand? I just can't. I don't know if I can.
No, I actually like the brand. I actually like going. I actually think the stores are actually pretty nice. I know people will make fun of me going, "Oh, you're such a liar." I swear. Remember, we had our people in our community go. The joke was I have poor people tasting food. Like my food tastes are Chipotle, McDonald's.
Yeah, you go to McDonald's and at the gas station you get your cigarettes and lotto tickets. Then you go to Big Lots and shop.
That was awful to say. I'm offended. Cancel Seth.
Really?
No, really. So I look at this going, man, I mean, look at this high number, Seth. 3% revenue growth. We're talking about 80 to 110.
Come on.
So does this mean I go buy it? No.
Yes. Oh, no.
No. What it means is go find research to say, is this a value trap? Because it's looking pretty effing good right now.
Speaking of how good it looks, me.
Yeah.
But also, we get a lot of questions. Okay, your next steps, Paul. We're dying to know. Next steps. I love Big Lots. The stock analyst telling me to buy. Now what?
Now, you read the 10K. You read a couple 10Ks. I know it sounds annoying. Or, not to put just too much, come join our effing community.
Yes.
If you join our software, you can go into the community chat up here and talk to a lot of people who've done the research. Everybody can split it up. All right, guys. So one way you can use our software to really decrease work and increase profit, we're going to go to our chat up here in the right-hand corner. This is where all 6,000 community members sit and hang out.
I love this.
So we make our announcements in here, but let's go here and just look up Big Lots. Look at this, guys. Just in the last couple weeks, we've had 4 mentions of Big Lots. You can click on them and see what people are saying. What do you think of Big Lots as a value play? What are your thoughts on Big Lots? Very low price to earnings. Shares outstanding going from 116 million to 38 million. All these people are talking about it. And these conversations will keep going in the chat. I'm just talking about these initial starts. I can even look up Big. That's a little probably generic for it, but Big has 483 results. It's not specifically enough because that's their ticker symbol, but these are the things to look up. Mm-hmm. This is how you use the chat to do less work. Another way to do work on this company is go to a store. Did you like the experience? Was it clean? Was it nice? Was it easy? Were the people friendly? All these things matter. Did you really find good deals on stuff? Because guess what? The world's changing. Internet's changing the way we shop. So they have to get Big Lots to succeed has to give people a reason to go in the stores. So go to a store yourself and see if you like the experience. That's very simple. These are the things you can do to get more research done to understand the company more and more.
If you're drawn to this concept of looking at the numbers, you can click on this card in the upper right-hand corner, watch a video on our 8 pillars, how we use them to analyze the metrics we use to analyze companies. Paul, that was a great take. Big Lots, that is interesting. Moderna, that's a one of. And Olympic Steel, follow the steel trends. I dig you. Make sure you guys fondle the thumbs and the tickles.
Yeah, something, whatever you just
subscribe,
said.
And you'll see more videos from us. Thanks for watching. See you.